Welcome to Perspectives Live. Each week, we bring you timely insights, expert perspectives, and the trends shaping what's next in banking, credit unions, and fintechs. Today, we'll be hearing from my friend Cisco Malpartida Smith, Managing Director of Strategic Advisory here at SRM. And here's what you need to know this week. So Cisco, welcome. I'm so glad you could take time out of your very, very busy schedule. Your calendar is not one to envy, but I really am grateful for your time today. Talk to me about your role in strategic advisory and some of the work that you're doing here at SRM.
Well, it's very exciting. Thank you for having me first. And what we're doing is supporting a lot of credit unions in their strategic journey and their sort of mapping of that. And I think we're seeing a bit of an evolution in the thought process around what strategy means. So we're seeing a lot more discussions and work being done. And I'm just privileged to be able to hopefully add value to those conversations and development so that we can just be, the best credit unions we can be for our members and communities.
We certainly do a lot of work around M&A, and certainly there's been a pretty significant uptick in activity the first, 6 months of the year. But I'd love to talk about organic growth, the long game. That's certainly an area that you have a lot of expertise in and have seen a lot of success. So talk to me about what you're hearing and even seeing firsthand in the industry as blockers for growth. What are the pinpoints of which are preventing growth or slowing down organic growth? And then talk to us about some of the things that you're seeing in the market of how we're overcoming those hurdles.
As you said, mergers and acquisitions, maybe even 5-10 years ago, certainly, M&A was not necessarily a part of the strategic plan of a lot of credit unions. It was still somewhat taboo to sort of have that and sort of talk about it. Now, pretty much every credit union that we're going to see, it's part of it. And it's not necessarily to say that they're all saying that they want to be acquirers. It's what happens if someone tries to acquire us? What's our response? How is that going to, what's our strategy here on just how do we want to play this? Now, the truth, though, is while many credit unions are still sort of struggling on the M&A question and trying to figure out how to sort of go forward in that space, 100% of them still want to be better at organic growth. And it doesn't matter whether you're going to be good at M&A or not, you have to be good at organic. And the problem is that we all offer the same products with the same great rates. And we all say our differentiator to some degree is our great service. But I mean, that when we're all the same, that's not really the same and or good enough. And, the challenge is also that, I'd certainly say, 10 years ago, Chase and the big banks, their NPS scores, for example, were in the 30s, 35%. Now they're seeing 75, 80% is their averages. That's in the same realm as we are. So they've been able to take their technology and improve that experience to such a degree that their perception of service scores are much stronger. And so that's diluted our quote unquote value proposition that we had in the marketplace. And so just one, I think, is really identifying what it is that we can be or should be good at and really being excellent at that, and then creating sort of blue oceans where we don't have competition in the same way when we have the same auto loan, the same price point in the same market with multiple providers.
Yeah, it's interesting that the market has become so diluted with, the increased competition. Even though there's massive consolidation, the deposits are being spread across, community banks, regional banks, national banks, credit unions, fintechs, even retailers, when you think about Starbucks and even PayPal and all of these digital wallets. So getting very clear on the value proposition. So how do credit unions, community banks do that? What do they need to replicate from fintechs? What's the path forward?
Yeah, well, I like to work with them on sort of evaluating where they can be really already excellent at. And they probably have some nuances. And so maybe just an easy example might be, let's look at your original charter. Who did you, for the last 80, 50, 90 years, who are you supposed to serve? Let's just take police officers as an example. And I use this example, and it's one of my favorites because I think it's a real fast one. But I'm going to take my friend Keith Stone, who's the CEO of the finest federal credit union in New York City. He's serving the largest police force in the world, the New York Police Department. And he offered a product when they launched that credit union. It's not that old. It's maybe 15, 20 years old credit union. They offered a in the line of duty insurance product. And how that worked was it was completely free to the members. But that product was up to $800,000 worth of loans would be forgiven if you died in the line of duty. Now, think about this. Their target market, and there's still a closed field of membership to police or the police community. How many of those members and their families might care about that benefit as a factor in their consideration of where they might bank? Hey, I have that peace of mind that if anything ever did happen to me, my family's taken care of. Now, they made that economics work for that credit union that the only reason they'd ever have to have a loan be forgiven up to $800,000 would be as if that member actually had a mortgage with them, because that's the only thing that goes that high. If they did a mortgage with the credit union, then they made enough money off of that transaction to cover the insurance. It was a third-party insurance premium, $140 or something like that, to get that coverage. Now, here's the differentiator. He's in a highly saturated market of New York City, right? Every corner of every street pretty much has multiple financial institutions. So how does he come into that market and really hone in on the needs and the challenges of the community that he's trying to support? He found a way to find in this case, it was a product solution that created some level of differentiation in the solution. I think that as many credit unions, we need to just do some introspective looking at who we're trying to serve. Are we truly doing a good job of serving them in their needs? It's probably not just a generic auto loan to members. And now we're trying to get into the rate war of, well, are we 25 basis points lower than the competition? Or are we convenient enough at a dealership that you're just getting it there? That's an indirect loan. Like, that might not be good enough. And so figuring that out, coming up with those strategies, executing on them extremely well. And now you're not competing in that same space. You're creating blue ocean opportunities.
So how does the technology part of this strategy now become more than just an operating or an efficiency mechanism? How can folks leverage technology to do more differentiated solutioning for, their credit union?
There's so many ways. Obviously, technology is, if you think back 20, 30, maybe 30 years ago, a good online banking solution might have been $1 million investment for a financial institution. So for the smaller institutions, that was maybe not economically viable. We've been able to evolve those pricing structures for the vendor pools of different solutions to the marketplace. And now we've created, maybe it's at a unit cost. And so now I can have what is essentially top tier capabilities at whatever size institution I have. Assuming we have, a competent team, a desire, an ability to execute, there's a host of really interesting solutions that I think are continuing to be offered and evolve. Obviously, we're seeing that vendor pool even evolve, even historical ones to add, new AI capabilities into, older, products that make them kind of like a new life of those solutions. Problem I have, though, is that those are still some table stakes requirements. Consumers, let's just use the ATM as an example. That was supposedly, the automatic teller machine was supposedly going to get rid of tellers because that was, much more efficient. No, it just became an additional channel that then we had to support, service, pay for, offer. And that's challenging for us because that adds costs, but it doesn't necessarily take something away. I mean, some things are getting, bill pay is finally kind of going out, but most of the time we're adding new requirements. And the challenge, though, is these larger institutions are doing an extremely good job of providing top-notch solutions. And that's where that Chase number has improved from, the 30s to the 80% range. Is the perception is that a consumer is, wow, they're great. And frankly, what we're also seeing is consumers don't really want to have to interact with humans unless they have to. Now, Obviously, there's different markets. So rural markets still have a little bit more of that. Oh, I want to be able to talk to the teller. I want to talk to the people. I want to see them. But we're just seeing technology play such a larger role in the equation for how to be convenient and provide solutions.
I'm a massive fan of April Clobus over at Michigan State and what they're doing, Ben Maxim with the Reseda Group. But I know you're doing some really interesting work, particularly in that, university, college age demographic too, where again, yes, let's bring standard digital experiences to the table that are superior, but also what are some of maybe those niche, feature sets like debt pay down and consolidation, financial education. Talk to me about some of the work that you're doing that's really moving the needle in unique ways and driving more competition in the market.
If I had to choose one of my favorite markets for just about any credit union to think about in terms of where do we get the next generation of members? Is it the 35 to 45-year-old? Obviously, they may be in their prime of their borrowing years, their income, their credit. But the problem is that's the most competitive space that everybody wants. That's just a high cost barrier for us to try to compete head to head with. And the perception is that branch network, the great technology, like that creates a high hurdle for us. My contention is that in every market, we could potentially just go a little bit upstream. So it's not the 35-year-olds, it's maybe the 25 to 20-year-olds that are still in their formative, age where they haven't locked in with direct deposit yet. They may be considered to be low income or underserved or underbanked today, but they, if they're in the collegiate market, they go from, that consideration today, but graduates entering their life stages and hopefully needing their life stages of lending, first auto, first mortgage, first credit card. I'd love to be a part of that evaluation process. And so I've been able to hone a strategy, and maybe for a lack of creativity I just call it the college strategy, where quite literally we strategically align with a local area higher ed institution, whether that's a community college, state, private. I do believe it's a little corny, but once you go credit union, you'll never go bank. And so I really do believe that if we can expose this next generation to the benefits of a credit union, we can hopefully carry many of those relationships into the next few decades if we do it right. So that strategy has worked really well. And we've got quite a few engagements nationwide. And so you don't have to be a collegiate-based credit union, but typically if you're trying to serve the community in some way, that's a really effective way to look at maybe there's some higher ed opportunities in your market.
I love how you're thinking about that as an entire, member journey versus, a moment in time. So as we wrap up today, what are some maybe, top 3 things, advices you're seeing in the market for our audience? And then certainly how can people connect with you online, to continue the conversation?
If you're in every credit union needs to have a strategic plan. And it is definitely one of those check boxes that we are required to do. But there are different levels of that type of engagement and effort. And so for those credit unions that are definitely taking it very seriously and looking at it as an opportunity to help them figure out exactly how and what and who they're going to be excellent at, that's fantastic. And we'd love to be a part of that exercise, journey, and process. We all bring a different sort of mix to the table. I tend to personally focus on the sort of organic growth question, but that's definitely an opportunity to work with us or we can help you with.
Thank you so much, Cisco, for joining us today. It's always such an interesting conversation and such an important one. So I appreciate you sharing your perspective. And yes, if you have not connected with Cisco, please follow him on LinkedIn. He shares some really interesting content on this important topic for credit unions. Thank you, Cisco, for joining us today and sharing your perspective.
Thank you, Jody. It's been lovely. Thank you.
You're most welcome.